So we will introduce them later on when we start the presentation. So just to elaborate on how we are going to take this webinar forward, after my initial opening remarks, we will have a presentation from Ernst& Young. And after their presentation, we will open up the platform for Q&A. So we are expecting 30 to 40 minutes of webinar today. And then if anything, any questions, additional questions, you can always reach out to SME. So let me start the webinar with introduction to smart manufacturing and enterprises to our participants. Let me share the screen. And a small request to everybody to keep yourself on mute. You can keep your cameras on if you want to, but keep yourself on mute so that it doesn't disturb the presenter. Hope the screen is visible to everybody.
Make it full screen, sir. It is.
Okay. Is it okay now?
Yes, it is okay.
Thank you. Okay. So Smart Manufacturing and Enterprises is a 52-year-old industrial publication, and it was formerly known as Industrial Product Finder. Smart Manufacturing and Enterprises reaches to more than 1 lakh readers every month through its magazine and the website, that is ipfonline.com. With India emerging as a major economic power in the world, SME covers every aspect of manufacturing sector, from latest technology to government policies to business strategies. SME offers an assortment of news, interviews, views, and a well-researched articles. SME is widely circulated to manufacturing and engineering sector, such as automobile, auto component, electrical electronics, metalworking, machine tools, process industries, plastics, packaging, defense and aerospace, and general engineering, among others. We have presence in all major cities like Mumbai, Delhi, Kolkata, Bangalore, Chennai, Coimbatore, and Ahmedabad. Smart Manufacturing and Enterprises is published by ASAP Info Global Group, which also publishes magazines like Indian Textile Journal, Construction World, Equipment India, Indian Cement Review, and Infrastructure Today. ASAP Group also hosts conferences and exhibitions such as India Construction Festival, Cement Expo, 3i Expo, Rasta Expo, Infrastructure Today Conclave, among others events. So with this, let's come to today's webinar. So for last 52 years, smart manufacturing and enterprises has been playing a role of felicitator for the growth of Indian manufacturing sector by equipping enterprises and the manufacturers with information that enables them to drive in the dynamic marketplace. While policies such as, especially related to taxes, are crucial to the business, often people find them complex and not so easy to understand. In our endeavor to simplify matters related to policies and taxes to our readers, we are starting a knowledge series called as Policy Matters from this month. In today's first webinar under this series, we will discuss the topic of tax withholding, TDS implication for year-end provisions. And to share in-depth details about this issue, we have with us today Ms. Dikhat Patel and Mr. Rushabh Bhandari from ENY India. So before they start the presentation, let me share a few words about them. So Mr. Rushabh Bhandari is a manager with EY Pune and has more than 5 years of experience in international and corporate tax and regulatory services. He has worked on various assignments, including compliance, advisory, and litigation matters. He has expertise in handling various matters relating to international taxation, DTAS, such as software taxation, MFN Limited, etc. Can you mute yourself, sir?
Sorry?
Yeah. So, Ms. Nikat Patel has more than 2 years of experience in corporate and international tax and regulatory affairs, regulatory services. She has worked on multiple domestic and international tax matters, such as beneficial tax regime under the Section 115 BAB, MFN, etc. She is also working on assignments involving tax technology. So, on behalf of Smart Manufacturing and Enterprises, I would like to welcome you both. And with this, you may start your presentation.
Thanks, Rakesh, for that introduction. I will hand over to Nikat to start with the presentation.
So can you confirm if our screen is visible?
No, I am not able to see. Yeah.
Okay. So, hello everyone. Thank you for joining us today. As Rakesh sir mentioned, our discussion will focus on the implications of TDS on year-end provisions. So let's first begin.
Your voice is not clear. It is humming. Your voice is not clear. Like, can you just check it up?
I'll just check. Is it better now? Hello?
Yes, it is better now. Yes.
Yes. So I'll just begin again. As Rakesh sir mentioned, our discussion will focus on the implications of TDS on year-end provisions. So let's first begin with understanding what is meant by provisions. A provision is essentially an expense recorded on an estimate basis because the exact amount is not clearly ascertainable at the time of making the provision. In India, the accounting standards require businesses to follow the accrual or the mercantile system of accounting, meaning that the revenues and the expenses must be recorded as and when they are incurred. So, to comply with this requirement as per the Indian accounting standards, what businesses often do is that they create a provision for expenses. This provision could be created either at the month end, the quarter end, or the year end. This is done by the businesses across India to present a true and fair position of their financial statements. Now, these provisions are recorded because at that time of recording the provision, the businesses are not clear on who the assessee, who the payee might be, or what is the precise amount that has to be paid. There are also certain other nuances that can affect this provisional entry, which is maybe sometimes we've received the goods or the invoices, we've received the goods or the services from the vendor, but we've not received the invoices from the vendor. So one such example that comes to my mind is that in the case of audit fees or in the case of any other professional fees, since the services are rendered on an ongoing basis and on a continuous basis, it is very difficult to sometimes ascertain the periodicity of such expenses. Now, this brings us to our first thought-provoking question. So while generally business expenses are deductible expenses for computing taxable business income of an entity, whether such year-end provisions which are recorded on the year-end to just provide a better view of the financial position, whether such year-end provisions can be considered as tax deductible expenses for understanding the business profits that would be subject to taxation.
Thanks, Nikat, for that introduction. Now, having understood what provisions exactly are, and now moving to the question whether these provisions or such provisions are tax deductible expenses or not, a very important aspect of taxation that one needs to consider is withholding tax implications. So, withholding tax implications, as a lot of y'all would be aware, is applicable almost to entire debit side of the P&L of the companies nowadays. any expenses that companies incur, including now because of recent inclusion of 194Q on sale of goods, almost entire expenditure of the companies is exposed to withholding tax implications. Now, what exactly is a withholding tax implication? Under Chapter 17 of the Act, TDS is required to be deducted at the time of payment or credit in the books of accounts, whichever is earlier. So basically, either when you pay or when you record an expense, whichever event occurs first, you have to withhold taxes at that particular instance. Now, what are the consequences of non-deduction? If TDS is not deducted or short deducted, it leads to a disallowance of 100% in case of non-resident pays, and 30% of these expenses get disallowed in case the expenses are paid towards resident pays. Further, there could also be additional consequences of interest, penalty under Section 271C, and this can also potentially, in a very rare case, stretch to a prosecution risk. So, in sum and substance, withholding provisions are very comprehensive, very elaborative, and now the question arises whether these withholding implications or withholding provisions also apply to the year-end provisions which are recorded in the books. Now, to understand this, a lot of judicial precedents and guidance on this subject matter has evolved over the period of year. Over the period, a lot of courts have held this issue in either in favor of the taxpayer or against the taxpayer. So let's try and understand what are the arguments that have been put forth both the taxpayer assessees and the department on this issue on of whether withholding is to be done on year-end provisions or not.
So let's first understand from the taxpayer's point of view and what are the contentions that the taxpayers typically take on the year-end provisions. One such contention that the taxpayers take is that at the end of any financial year, the exact amount of many expenses is not finalized. This could happen for various reasons. And
Nikat?
yes, sir.
Yeah, we have lost your connection.
Am I audible now?
Yeah, please continue.
So the first contention that every taxpayer takes is that at the end of any financial year, the exact amount of many expenses is not finalized. This could be for various reasons, and provisions that are made are based on estimates. And sometimes the specific parties involved are also not known. So the two main things that are being highlighted in this is that two main arguments of the taxpayer is that one, the amount is not ascertainable, and the second is that the party is not known. This really brings us to understand that the TDS provisions that are put in the Act, the TDS provisions basically require, as per the scheme of the TDS provisions under the Act, the credit for a TDS is to be given to the deductee. That means that the payee should be identifiable. Thus, the identification of a person from whose account income tax was deducted at source is a prerequisite condition. This means that when I am like, if in case, considering an example, in case I am supposed to withhold taxes and make a payment, if I am not sure at my end who the payee is, who will I be crediting such amount to? When the payee is not identifiable, to whose account should I do the credit for such TDS? And hence, the taxpayers contend that they cannot really do a TDS withholding on the year-end provision. The second such highlight is that as per Section 203 of the Act, another such requirement is that every payer has to give a certificate to the person to whose account such credit is to be given. Therefore, when the tax deductor cannot ascertain the payee who is the beneficiary of the credit of tax deduction at source, the mechanism of entire TDS cannot be put into service. So, in sum and substance, there are two things. That is, the provisions of the TDS cannot be applicable. The entire mechanism of TDS will fail if the payee is not identifiable to whose account you're giving the credit of such taxes. As on the later side of the year, the payee will take a credit of these taxes that you're withholding on their behalf. Now, if you see the second contention of the assessee is that tax withholding applies only if the amount is considered as taxable income of the recipient. Since these provisional amounts are not finalized at the year end, they cannot be treated as income for the payees. In this stance, what the assessee's contention mainly is that the provision that are recorded at the year end is merely on an estimate basis, and this could really differ from the actual amount once it is determined. So accordingly, this cannot be considered as the taxable income of the payee at the time of my year end provision. Hence, I cannot be withholding TDS on this amount. This comes to my third contention that each taxpayer generally takes. That is that the entire provision amount which I am making at the year end is adjusted in the next financial year, which is reversed in the next financial year, with TDS deducted based on actual invoices that are received in the year. Detailed statements showing these adjustments are filed with the tax authorities, ensuring compliance with TDS requirement. Here, what the assessee generally contends is that, okay, my expense relates to one particular financial year, say financial year 23-24. In that financial year, I have created a year-end provision. For that year-end provision in the next year, which is say 24-25, I'm reversing this provision, and then on an actual invoice basis, I'm carrying out my TDS requirements. When I have ascertained the pay and I have ascertained the amount. So, as such, in sum and substance, I am not really non-compliant, and I should not be held as an assessee in default. Also, there are two cases over here that the assessee could do. One is that the assessee can do the disallowance under section 40A and AI, which is for non-withholding of TDS on the provisions. And second case is that the assessee does not sometimes even carry out the non-withholding, or does not even carry out the disallowance while filing the return of income. Now, in sum and substance, these three are the primary contentions of the assessee. And these are also held up by a lot of judicial precedents and by various courts. Some of them are present on the screen, while there are many such judicial precedents. There are many such tribunals across India that have ruled in the favor of the assessee. Let us now look at the tax revenues point of view.
Yeah. Now, having looked at the arguments which are generally presented by the assessees, we should also, look at what are the arguments which the department, the assessing officers make to conclude or to contend that withholding is required on the year-end provisions. Now, first such argument is that a lot of times assessee credit the provisions to a suspense account and not really credit these expenses to the party's account. Now, just because the amounts are credited to a suspense account, it becomes difficult to contend that the parties are not identified or the provisions are made on an ad hoc basis, and that is why withholding is definitely required. Further, once the
आए करना बंद कर दे कौवे की तरह, ये रहा जवाब. बस एक चीज कहूंगा, विक्टिम कार्ड मत खेलियो.
Okay, once the pays are identified, which is evident and generally confirmed in the tax audit report also, it cannot be said that provisions are not crystallized, even though such pays are not credited in the books of accounts. So, as Nikhat had mentioned, in certain cases, a suo motu disallowance is considered by the taxpayers, and this disallowance is also reported in the tax audit report. In the tax audit report, a lot of times these, or almost always, the disallowances are reported party wise. Then the arguments of revenue is that if you know the party, if you know the amounts, then a withholding is definitely required, and then in the TDS proceedings they could instigate interest and penalty disallowance also. Lastly, a very important point is that in case the assessee contends that the provisions are only on ad hoc basis and pays are not identifiable, the onus of proving this is on the assessee. So, if a revenue officer or the department has initiated any proceeding and they are contending that provision was supposed to be done, withholding was supposed to be done, the onus of proving that factual matrices are such that withholding could not be done is on the assessee, and that will have to be backed up by a lot of documentation. Thus, these are generally the contentions or the arguments which are made to say that provision requires a year-end provisions require withholding, which are also supported by various tribunals. As you can see, Bangalore Tribunal and Delhi Tribunal are amongst the prominent tribunals which have upheld this position. Now, after considering the arguments from both the sides, that is, arguments to say withholding is needed and to say that withholding is not needed, based on practical experiences, we've listed down a few takeaways on this issue. First is that the matter is highly litigative and taxpayers have faced arduous litigation on this issue. Once this matter is picked up for litigation, it is likely to reoccur. So basically, if 1 year is picked up for litigation and they find out that a position is taken that withholding is not done on year-end provisions, then a lot of subsequent years also generally get picked up for scrutiny. During the litigation, department often requires backup documents highlighting mapping of actual booking of provisions created and proof of deduction of payment of TDS on actual invoices in case a position is taken that withholding is happening in subsequent years. A very important aspect here also is that there is a risk of 100% disallowance in case of payments to residents. As we had seen earlier, only a 30% disallowance is triggered in case withholding is not done on payments to resident parties. But if the contention is that withholding was not done because the parties were either not identified or the provision was done on an ad hoc basis, there is a risk of this being categorized as a contingent liability or a contingent expense, and that is why disallowed under Section 37 of the Act. And lastly, as I had already covered this point, in the tax audit report, these disallowances get reported section wise and party wise also, which makes it difficult for the taxpayers to contend that a withholding is not required. So to summarize, what is to be seen is that basis the facts in each case, whether parties are identifiable, whether the provisions are made on a accurate estimate basis, on a more reasonable estimate basis, and if such conditions are met, or if such is the fact pattern, then the better position could be to do withholding, go conservative on the position that you're taking, and comply with the withholding tax provisions.
So, concluding on the topic, the key points to keep in mind would be that a year-end provision is very essential and is a very essential part of the financial reporting. But they come with really complex tax implications, especially concerning the TDS implications. And by understanding these provisions, the following and by following the best practices, a business can evaluate and mitigate the risks of non-compliance and avoid all the potential penalties, prosecution risks, etc. It may be thus prudent to withhold taxes wherever factual backup supports the position. So every time you have in every fact pattern, this will have to be analyzed because every fact pattern is different, and in every fact pattern there might be payments to residents, to non-residents, and in each case one needs to really see the backup supporting documents that you have, and if the amount is ascertainable, the pay is ascertainable, then one can explore the position of actually withholding TDS on it. However, in each case, it would be very crucial to consult with the tax professionals to navigate these complexities and to ensure that all the provisions are accurately recorded and compliant with the tax laws.
Yeah. So that was it from our side in terms of presentation. I hope we were able to share some light on what the nuances are in on withholding tax provisions and implications, withholding implications of the same.
Thank you, Rishabh and Nikat, for your excellent presentation and enlightening the audience about these provisions. So now the platform is open for question. If anybody has any kind of questions to be asked, please unmute yourself and raise the question, please. So let me check. Okay, so there are a couple of questions that we are getting on the chat box. So one is from Drupad He is asking, has the Biocon ruling overturned most of the arguments for not deducting TDS on year-end provisions? Rushabh and Nikat, would you like to answer it?
So the Biocon ruling, as Drupad. So Drupad, is your question that whether Biocon ruling has been overturned by a High Court or a Supreme Court? Is that what you're asking?
Drupad, you can unmute yourself and ask directly.
Yeah, hi Rishabh. So no, that's not the question. The question is basically all the arguments which Nikat and you presented,
Yeah.
that the year-end provisions, we have got sections which say it has to be the income of the other party, whether it's in the suspense account, all of those arguments, whether that gets overruled with the Biocon ruling.
No, so, okay, the Biocon ruling generally does cover a lot of those arguments, but the thing is, it is still a tribunal ruling, and Mumbai tribunal and Pune tribunal also has taken views in favor of the taxpayer. So it is a very important ruling, so to say. But there are arguments still in favor of the taxpayer assessee to argue that withholding is not required. So it's an comprehensive ruling, yes, but because it's a tribunal ruling, not a High Court or a Supreme Court ruling, the other arguments are still valid, and we'll have to wait till this issue gets settled at a higher forum.
Understood. Thanks.
Thanks, Super.
So there is one more question in the chat box. What strategies can businesses adopt to minimize the risk of litigation? I would just add on to this question is, especially we have a lot of small and medium enterprises who are our readers. Is there any specific provision for SMEs in this regard?
Okay, so I'll answer both the questions. Answering your question first, sir, there is no specific exclusion for SME, so to say. There are threshold limits in each of the withholding sections. So, for example, 194J, 194C, there are threshold limits which have to be breached, and only after that withholding implications are triggered. But generally, those limits are very less, somewhere around 20,000, etc. So there is no specific carve out for small and medium enterprises to give them a benefit of not doing a withholding compliance. It is generally applicable to across all SSEs, and there is no specific relief. And to answer the question of Rupam, what strategies can businesses adopt to minimize the risk of litigation? A very simple answer is go conservative. If avoiding litigation is your goal, or is what you want to achieve, then go conservative. You comply with the withholding provisions. It is very important to navigate carefully in case of provisions, because sometimes, as we mentioned, the pays may not be identifiable or the amounts are not certain. So you have to carefully comply with the provisions in such a way that you're not not giving a benefit to the recipient also, or you're doing excess TDS, or you're doing short TDS. So you have to have a strong documentation, you have to have strong basis of creating the provisions that you're creating, and then back it up by complying with the withholding tax provisions. That will help you avoid a lot of litigation in future.
I think basis the documents that are available in each fact pattern, one business, like a business, needs to identify that in case where you can comply with the TDS provisions and the withholding provisions, you do it. And where it is actually not possible, you maintain your backup documentations to that extent, and this will really help you in the litigation process.
I don't see any questions in the chat box, and there are no other questions from the audience also. So I think we can close for the day. And before we close, I think I would like to thank Nikat and Rushabh for sharing their valuable insights on the topic of discussion. And also thank you all the participants for joining us for today's webinar. It was a pleasure having you both for today's discussion. And with this, I would also invite all the participants to join us in our next webinar. That will be mostly on the August 7th, and the topic of discussion will be the budget, since budget is going to be presented on 23rd. So we will be discussing the implications of budget announcements in our next webinar. So till then, thank you and take care. Goodbye.
Thank you.
Thanks,
Thank you.
everyone.
Thank you.